Bitcoin is much more volatile, and history shows when it does go on these runs, that tend to, you get some FOMO and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do,
Mhm.
kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there. The first drawdown I think was 90 some odd percent. More recent drawdown, last drawdown I think was 70-ish, and I expect these drawdowns to move to the 60s and 50s and 40s. I mean, over time, as it gets more widely distributed.
Lawrence Lepard begins by highlighting Bitcoin's recent breakout from a prolonged period of sideways trading. For months, Bitcoin hovered within the $58,000 to $73,000 range, forming what many referred to as the 58K Club. However, as Lepard anticipated, once Bitcoin broke through the $73,000 level, it surged rapidly, reaching as high as $99,000. He attributes this to Bitcoin's historical volatility and the FOMO, fear of missing out, that often accompanies such breakouts. Lepard outlines a pattern tied to its 4-year halving events. Historically, Bitcoin has exhibited significant upward moves during these cycles, often achieving multiples of 4x to 6x from its base. Based on this analysis, Lepard sets a target of $200,000 for the current cycle, with the possibility of reaching even higher levels, such as $250,000 or $300,000.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I don't look that short term, and it's just a number. I mean, the more important thing to me that I found so interesting was just how strong and persistent the breakout was. And for those who've been following it, Bitcoin had kind of been trading sideways for quite some time, and there was a joke on Twitter about the 58K club, and 58K was the bottom, and kind of high 60s, 70, low 70s was the top. And I always sensed that when it did break through the 73, 72, 73 area, it was going to squirt higher. And boy, it sure did. It went it kind of straight lined from 70 something to 99, as you know. Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that tend to, you get some FOMO and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do, kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there. But obviously today it's getting hammered, and it wouldn't, it's not unusual either for things when the breakout to go back and test the breakout point. So I think I'd be very surprised if it went below 73. I'd actually be surprised if it went back to 73, but could it retrace a bit of the recent gains? Sure, it could. A lot of it depends on how many of the buyers in the last, month or so have been doing so on leverage and have been doing so with speculation. When they suddenly realize that 110 isn't imminent, and they get scared, they're going to bail. And so we'll have to go back to 90 to build a new base at 90 or something. I don't know. That's just a thought. I mean, it's very hard to tell. And I never trade it. I never sell it. I just have my Bitcoin, and that's that. I view it as a long-term, store of value, very much the way I view the gold that I own as a long-term store of value.
When you say 200,000 as a cycle top, when did this cycle start for you?
It kind of started when it was kind of trading around 50. I mean, the bottom was 15, as you know, after FTX, but it kind of based for a number of years around 50-ish, 50, 58. I don't have a chart right in front of me, but and the history of these cycles is they tend to go to 4, 5, 6 times the base. So that would imply that we could get to 160, 200, maybe even high as 250 or 300. I don't know. Then it would be quite extended above its 200-day moving average, and it would be quite extended above the power law model, which I think has validity, because backtesting the power law model has described 97% of the movements. So, it's the thing I think people have to keep in mind is that it's a volatile asset with a strong bias upward. And I've always recommended people have a little bit of it, or the only wrong allocation is zero, and you should dollar cost average on your Bitcoin purchases. I mean, I was buying it at 15, buying it at 30, was buying it at 50, was buying it at 70. When I get some more money, I'll buy it at 90. I think it'll be much higher in 5 or 10 years, but between here and there, it could go up and down a lot.
Okay, so basically it'll 4x from its bottom in the next cycle. What's your thesis there?
Because that's if you go back and you look at prior cycles, that's kind of what's happened. In earlier cycles, it was actually more than 4x. And it's not just the X, it's kind of the standard deviations off the base. This is the power law model. But there were some of the earlier cycles, you actually got like 9x off the bottom or off the base. But it's, with each, as it grows up, as more people hold it, as it gets more widely distributed, you see that the ups aren't as bad and the downs aren't as high and the downs aren't as low. The first drawdown, I think, was 90 some odd percent. More recent drawdown, last drawdown, I think, was 70-ish. And I expect these drawdowns to move to the 60s and 50s and 40s, I mean, over time, as it gets more widely distributed. I'm not a big altcoin fan. I mean, I don't own any altcoins. I don't believe in them. I know there's some apps being built that have value, and so I don't condemn all of them, but from a monetary policy point of view, I mean, I view Bitcoin as a digital form of sound money. Gold guys hate me when I say this. I just argued with Peter Schiff all weekend at this show about it. But, I view Bitcoin as really kind of a digital form of gold. I mean, it's a limited supply digital asset, which, for some gold people, that's hard to get their arms around because you can't touch it. But it's an immutable ledger, and money has, in my opinion, always been a ledger. And as long as you know that the network's going to keep working, there's risk in that, but as long as you believe that, then it's a logical conclusion that something with a fixed supply that more and more people are using and growing and going toward will increase in value over time. And that's obviously what we've observed. I mean, this has been the best performing financial asset in the last 15 years by quite some measure. And that's just a fact. So, whether you love it or hate it or emotion or whatever, it's just performing really well. And so then you kind of say, all right, somebody says, well, the bubble's going to burst. And I say, fine, what's going to change that? What's going to stop it from having that performance? I mean, the only thing I can think of is just catastrophic failure. And, I was worried about
catastrophic failure, like what, hacking, or what do you mean?
No, I don't worry about hacking because it's technical, secure. And people are worried about quantum computing, but I think that's too far off. I don't worry about that. No, just I don't know. I mean, just some bug that we're not aware of that just causes the whole thing to blow up. I mean, I was worried about that much more so in the earlier days. We're now 15 years in and 870,000 blocks into it. I think the odds of that are quite low.
Lepard notes that Bitcoin could benefit from such a scenario. As confidence in traditional financial systems erodes, more investors may turn to Bitcoin as a hedge against systemic risk. However, he cautions that Bitcoin's success depends on its continued security and adoption. While he views the likelihood of catastrophic failure as low, it remains a consideration. Lepard concludes by discussing the critical role of sentiment and adoption in driving Bitcoin's price. He observes that sentiment often peaks during bull runs, leading to euphoria and unsustainable price levels. Conversely, bear markets create opportunities for accumulation. He encourages investors to focus on the long-term fundamentals rather than being swayed by short-term market movements.
To those of us who are hardcore Bitcoiners that believe in self-custody, look, the ETFs came in and they were a really positive thing because what they did, they said to a lot of my friends who wouldn't buy it because they said, well, Larry, I'm not going to buy that because the government's going to outlaw it. Well, suddenly the SEC says it's legal, and not only is it legal, but we're creating an ETF. And all those friends said, oh, okay, I get it. You're right. Maybe I should buy some. And they did. The issue that's going on that there is some risk inherent to it is all those ETFs now own a ton of coins. In fact, there's a great chart that shows the growth of the ETFs, and it's stunning how big they've gotten and how quickly they've gotten that big. I mean, compared to the gold ETF when it was launched, and that one did very well, by the way. It's stunning how quickly the ETFs have grown. But here's a threat. The U.S. in 4 years we have a blue wave. We go back to a Democratic administration. The dollar's failing. Inflation's high. and the socialist Democrats decide that Bitcoin is the cause, or Bitcoin and gold are the cause. It's these sound money people. They're ruining our beautiful Keynesian system. And furthermore, they know what Roosevelt did with gold, where he confiscated it. And furthermore, they're going to pass a law that says that the U.S. government's going to seize all the Bitcoin, and so you have your Bitcoin at Fidelity, or you have your Bitcoin at iBit, or Coinbase, wherever it might be. They're going to send you a check for the dollars, but they're going to take the Bitcoin themselves. And so it's kind of a 6102 attack. That was the executive order that Roosevelt used. And so that's somewhat problematic. I mean, if that kind of thing occurs, I'm not saying it will, but I'm just like everything else in the world, the government. The thing I think it's important for people to keep in the back of their mind is the government will always do what it has to do to keep itself alive until we get it under control. And so that fear is in the back of my mind. But Bitcoin has a solution to that, which is to say, if you self-custody your own coins, you have your own wallet, your own keys, and the government says send it in, you can kind of decide whether that's something you want to do or not. Now, they can send men with guns to your house, I suppose, but you could also get on a boat and go to some other country. So, will that happen? I don't know. I rate that as a low probability, but not a zero probability. I mean, it's hard to overemphasize how extremely overvalued this is. This is like in the top 1% of valuations ever. It's more overvalued than 29. It's more overvalued than 2000. I mean, there's a lot of good analytical work out there that just shows that the free money that we had, the ZERP and the low interest rates that we have blown an enormous stock market bubble. And if nothing goes wrong, valuations can stay stretched for a long period of time. But if something goes wrong, the stock market turns. A lot of people are in the stock market. Everyone bases their economic spending patterns on how the stock market is doing. And for some reason, for whatever reason, heaven forbid, the stock market turns, it's going to make this entire situation. It's going to turn it into a mess.
But does it need a reason to turn?
I don't know that it does. I mean, sometimes they say it's just exhaustion, right? I mean, the last buyer shows up and there's nothing more. I mean, that's the other thing at this conference in New Orleans. I saw Bob Prechter had a great chart on sentiment. I mean, the positive, the sentiment charts. There are no bears left. Everybody's bullish. I mean, there are literally no bears left, and the sentiment charts are off the chart, so to speak. So, and that's usually, when that occurs, everybody's all the way in, and when we run out of new buyers, it'll eventually start to go the other way. But that could be now, that could be 6 months from now. David Hunter thinks we've got another 1,000 points to go here, or maybe a tad more, as the Fed keeps cutting rates and people get excited about Trump.
Lawrence Lepard offers a balanced and insightful perspective on Bitcoin's past, present, and future. He views Bitcoin as a revolutionary asset with the potential to reshape the financial landscape, likening it to digital gold. While acknowledging risks, he remains steadfast in his belief that Bitcoin will continue to appreciate as adoption grows and the flaws in traditional monetary systems become more apparent. For those looking to navigate the complexities of Bitcoin investment, Lepard's advice is clear. Think long-term, embrace dollar-cost averaging, and prioritize self-custody. As we move into the next phase of Bitcoin's journey, the opportunity to be part of this transformative movement has never been more compelling.
Please like and subscribe my channel.